Hello, and welcome to our webinar series on AML CFT inspections. This video will cover technology risk assessments, as well as the AML CFT inspections focus and some best practice methods. Firstly, what is a technology risk assessment and why should operators undertake them? A technology risk assessment is a documented assessment that identifies, evaluates, and manages risks associated with the technology, systems, infrastructure, and information security controls that support the gambling business. The purpose is to assist the operator identify and understand the risks posed. And this is particularly important for the gambling sector as innovation and early adoption of technology is high in the industry. The technology risk assessment needs to be completed as soon as reasonably practicable, and it is recommended that a draft technology risk assessment is prepared prior to the launch of the technology, but updated once the operator has customers and is live. It is important to regularly review the technology risk assessment to keep it up to date. The technology risk assessment should be designed by AML CFT experts, such as the MRO and AML CFT compliance officer, but carried out with input from the technical expert on that piece of technology. The code lists 4 factors that the technology risk assessment must be. It must be undertaken as soon as reasonably practicable. It must be undertaken prior to the launch and the use of the technology. It must be recorded to demonstrate its basis, and it must be regularly reviewed and amended to be kept up to date. A regular breach of the code requirements that the inspectors find when on an inspection is that the technology risk assessments are completed retrospectively. As noted within the code requirements, a technology risk assessment must be completed prior to the launch of the technology. From speaking to operators during an on-site inspection, a regular question is that the operator needs to test the technology first before being satisfied that it is something that they can use. Therefore, doing a full technology risk assessment for a piece of technology might not be used as a good use of time. This issue is acknowledged, and whilst a full technology risk assessment for a new piece of technology that might not be used, may not be the best use of time and resource, a draft technology risk assessment would be expected, but then an update to the risk assessment with live data if the technology is to be used. The technology risk assessment should evaluate whether the technology used throughout the business adequately supports AML CFT compliance, manages the risk identified in the business risk assessment, protects data, verifies customers, and screens for financial crime risks. And the technology risk assessment must have regard to all relevant risk factors. Going through A to G of the code, a technology risk assessment is required for CRM systems, KYC platforms, PEP and sanction screening software, transaction monitoring software, and any suspicious activity reporting management tools. And this is because failure in these systems will result in the operator not complying with AML CFT legislation. Therefore, regular system checking and manual review of high-risk alerts is recommended. Ensure the technology risk assessment reflects the money laundering and terrorist financing risks identified in the operator's business risk assessment. So if, for example, the business risk assessment identifies complex ownership structures as a higher risk, then the technology must be in place to trigger beneficial ownership reviews. Consider whether the products and services create specific technology risks, such as increased anonymity, complex transactions, or cross-border activity. For example, if the operator accepts virtual assets or virtual goods, then there is an increased risks involved. Therefore, technology such as crypto-analytical software would be recommended to control this risk. Review the risks arising from online services, remote onboarding, communication methods, and payment methods used by the customers. There is record-keeping requirements on operators. It is essential that new and developing technologies used for digital information and document storage are risk assessed. For example, cloud-based document management systems, electronic client files, or digital archive systems will need to be risk assessed. Review the technology used to verify customer identities and documents electronically, ensuring it is reliable and effective at identifying fraud. For example, electronic identity verification providers, facial recognition and liveness checks, or digital verification of passports and driving license. There is a risk of acceptance of forged documentation, therefore using reputable verification providers or periodic effectiveness reviews are recommended. Review systems used to screen customers and transactions against sanctions, PEPs, adverse media to ensure that they operate effectively. And this includes sanctions, PEP, transaction monitoring systems. There are risks that screening fails to identify true matches or have excessive false positives. Therefore, regular rule collaboration is required and independent testing of screening effectiveness is recommended. During an on-site inspection, the AML CFT inspectors will be focusing on whether the operator knows the AML CFT technologies it uses, the risks associated with those technologies, the controls to mitigate the risks. The assessment is linked to the business risk assessment. The assessment is reviewed and updated when circumstances change, and that senior management understands and approves the technology risks. And some best practices. Clearly explain how the technology controls risks identified within the BRA. Focus on the material risks rather than describing every piece of software. Instead of just stating that the system is what is used for, explain its limitations, how effectiveness is testing, and what happens when it fails. Look at the technology used for onboarding, identification, risk assessment, screening, ongoing monitoring, record retention, and suspicious activity reporting. A strong technology risk assessment will reference system testing, incident logs, and effectiveness reviews. Therefore, in a nutshell, if the operator understands the following questions for each of their technology it uses, then it will usually meet regulatory expectations. What does the technology do? What AML risks could arise if it fails or is misused? What controls mitigate the risks? And how do we know these controls are working properly?